So, Nike, Clorox, and Procter & Gamble paid me money as a teenager for doing absolutely nothing, and in total, they paid me $2.15. I'm sorry if the title was very clickbaity, but I want to tell you guys how much money you can actually make from investing your money into a huge company. When a company pays you money from holding one share, it's called dividends, meaning that for every share you buy from a company, they pay you a percentage of the share you paid for. For example, if you bought a share for $100 and the dividend yield, which is the payout, is 4%, every 4 months, you will get paid $1. And in 1 year, it'll be $4 annually for just one share. These payouts happen every 4 months or a year, and it sounds like the company isn't giving you anything. But when you hold stocks and keep buying for the long term, the company's value increases and their dividend percentage will also increase every year. But this only works for companies that are actually lasting and have a good brand behind them with a 50-year dividend increase like Coca-Cola, Johnson & Johnson, and Procter & Gamble. Many people use dividend payouts to actually retire early. If you were to buy $1,000 worth of Coca-Cola, which is 21 shares, your annual pay for the company would be $34.44, which is $8.61 every 4 months by doing absolutely nothing. Or you can invest $10,000, which is 204 shares. You can make an annual of $334.56, which is $83.64 every 4 months. Since a share of Coca-Cola is $49 right now, you can basically buy 2 more shares when you get your dividend payout, increasing your dividend value. And when you do that for the whole year, you'll gain 8 extra more shares without having to use your money, but using the check Coca-Cola gave you. And when you keep reinvesting dividends for the next 5 years, your annual dividend payout would be $400.16, which is $100.04 every 4 months. And looking at Coca-Cola's payout throughout 20 years, their shares and payout have been constantly increasing, and even with rough markets like these, they've still been paying their shareholders money. But this is not always a guarantee. There is no law saying that companies have to pay their shareholders money. They only do this to ensure that investors are still holding on to shares for the company to grow and making sure that they will get a fair share of it. No pun intended, kinda. You may not believe me when I say this, but you can actually become a millionaire when you do this type of investing. Warren Buffett has been investing in Coca-Cola for a really long time, to the point where every year he makes $656 million from increasing dividends in Coca-Cola for doing absolutely nothing. As a matter of fact, he actually makes more money than the CEO of Coca-Cola. Whenever you get a payout every 4 months, you can reinvest that money to buy another stock and increase your dividend value. And if you think this is too good to be true, it is, but it isn't. Whenever you get paid dividends, you of course have to pay taxes. The IRS considers dividends as regular income and can tax your dividend investing from 10% being the lowest all the way up to 37% being the highest. Welcome to capitalism. But then again, if you're watching this video, you might be one of my friends supporting me, or you randomly found this video and want to create some sort of business for yourself. And if that's the case, you can always do these things called tax write-offs, meaning that for every purchase you buy from any business you create, you can receive tax deductions from the government as long as you have an LLC. I'll explain what it means for another video. You don't have to invest in individual stocks. You can also invest in ETFs like the S&P 500 or Vanguard ETFs. ETFs are companies that are piled into one fund. You can kind of see it like a basket that's filled with 500 apples. If one company doesn't go well, there are still 499 companies in the fund to keep it up. It's better when you invest in ETFs because you have very little risk when you invest. But like anything else, the less risky, the less payout. ETFs only have about 1% to 2% dividend yield, while individual stocks have up from 3% and all the way up to 7%. But the higher the percentage, the riskier it can get. And it's way riskier if you go for a stock that has more than 10% dividend yield and their stock drastically declining. These percentages can always drop if a company isn't doing too good. That's why you need to go for stocks that are considered dividend kings, meaning that they've been consistently paying their shareholders with only increasing percentages for the past 50 years. The more money that you put into these stocks, the more return you will gain for the next 5 years. And if you keep reinvesting the money you receive from dividends every year, you can retire as a millionaire when you're about 50 years old. This isn't a get rich quick scheme or something risky like Wall Street bets would do. There are other ways you can make money. In a couple videos that I made, I tell you how to. My suggestion for dividend investing is making sure that you need to know how much money you want to put in so you can retire at a certain age you want to retire in. If you want to retire early as 30 years old, you'd want to find a way to create a good amount of money, like having a high paying job or learning how to day trade. I have videos on my channel that tell you how I made a lot of money for my age in just one day. I'll leave it down in the description for you guys to check that out. I'm learning more about investing every single day, so expect videos on stocks and investing tips every Monday, Wednesday, and Friday. I'm still learning as I go, as everyone else, just at a younger age. But anyway guys, don't forget to smash that like button below for helping all the time and effort I make to creating these videos for you guys. Make sure to also subscribe and hit that little notification bell next to it to never miss an upload of an important info in stock trading. Thank you all again, and I'll see you guys next time.
Watermelon.